Gold prices on MCX hit another all-time high on Thursday. The record-breaking rally in the yellow metal is supported by mounting concerns over the ongoing trade war and its impact on global economic growth. Weakness in the US dollar is also among the key factors that support gold prices. MCX Gold June contracts jumped to a fresh all-time high of 95,935 rupees per 10 grams during the session. International gold prices also hit a record high due to the heightened demand for safe haven assets and the dollar's weakness. There is much uncertainty about Trump's tariff policies. The US president has raised tariffs on China to a whopping 245%, further escalating the trade war between the world's two largest economies. Fed Chair Jerome Powell said on Wednesday that the central bank would wait for more clarity on the economic outlook before considering any changes to interest rates. Powell highlighted the risk of a complex scenario in which tariffs raise consumer prices while simultaneously damping economic growth and potentially weakening the labor market. This, he cautioned, could result in inflation and employment deviating further from the Fed's goals. Jatin Trivedi of LKP Securities said that the rally is largely driven by geopolitical uncertainty and the absence of any constructive progress in tariff negotiations between the US and China, and until there is a concrete update indicating de-escalation, gold is likely to remain elevated. However, the momentum could fizzle out if both economic giants signal a return to trade talks or ease in tensions. Goldman Sachs is more bullish on gold than ever before. It has raised its forecast for gold prices to $3,700 an ounce by the end of 2025, its third such hike in this year. On January 1, 2025, gold was at $2,623. If gold closes at $3,700 by the end of 2025, it will have delivered 41%. According to Goldman Sachs, gold might hit $4,500 an ounce by the end of 2025 in a high-risk scenario. This means gold may end 2025 with a staggering return of 71.5%. As concerns about the US economy and the growing trade war between the US and China grew, the yellow metal became increasingly attractive as a recession-hedge solution. Gold is emerging as the best bet in the current economic environment. With the increased possibility of a US recession, demand for gold is expected to be driven by exchange-traded funds as well as physical demand. The rally in gold is also expected to continue amid demand from central banks. Another development that could push the gold price higher is the higher amount of selling seen in the US Treasuries. When bonds are offloaded, the 10-year yield rises, sending a signal that even the US Treasury is no longer a safe place to park funds. In such scenario, gold finds new buyers and the price shoots up.